Hey everyone, welcome to another video. Hope you all are doing great. I hope you guys are all profitable and doing well in the stock market this week. In today's video, I want to talk about picking the right stocks to sell cash secured puts on and go over some tips and advice when trying to sell cash secured puts and the stocks that I would recommend and what I would stay away from. So let's get into the video. If you don't know what selling cash secured put is, it's basically putting a set amount of cash in collateral aside, where your brokerage would do that for you in order to sell a contract where you are stating that you would purchase the stock at a specific strike price. So you guys might just be getting into selling cash secured puts, just starting off, and you might be going into a options chain such as this one and looking at all the options available for the specific stock, looking at the premiums on the right hand side here, as you can see, and thinking to yourself, wow, I can make so much juicy premium, so much premium from selling these cash secured puts at different strike prices. Obviously, the closer to the market price, the strike price that you choose, the higher the premium that you would earn. But in my opinion, and this is not financial advice, I would definitely recommend staying away from various stocks that are known in the stock community or investing community as the meme stocks or the hype stocks, such as Nikola that we are on right now. Just because when selling cash secured puts, you need to be comfortable owning that stock, since you are putting your own hard-earned money on the line to own that stock just in case your strike price gets tested. So for example here, Nikola, let's say, you know what, I don't mind earning 63 cents per share, which would equate to $63, since every contract comes in 100 share increments. For putting $3,000, since it's 100 shares at $30 strike price, on the line to earn that $63. But on the back of your mind, you should be thinking, hey, what if Nikola continues tanking? As you guys can see, in the past 3 months here, you guys can see that Nikola, since it went public here, it had a huge rally up. And for a company that's not earning any revenues right now, this is just not sustainable. And as you can see, since the peak of around $83, Nikola has just been bleeding down, and now it's even lower than what it initially IPO'd at. So right around the low 30s here, 31.21 today. So that's something to keep in mind when you're looking at options. Don't just look at the premium. I know it's very tempting. You might be thinking to yourself, wow, I could sell a cash secured put and earn $63 on my $3,000 of collateral, which would be roughly 2%. So don't just look at the stock. Make sure you're comfortable owning that stock and you see a future. Some tips that I would keep in mind is look at stocks that have always been on an upward trend. So the best thing to do is look at a stock such as Microsoft here. We'll put as an example. For Microsoft or any stock that you're looking at, I would definitely recommend looking at the 5-year graph. And this is just one of the things that you should be doing part of your research, which I definitely recommend. You need to do your due diligence and research the particular company that you want to sell cash secured puts on. Just because if you get tested and you're forced to purchase that stock, you want to be comfortable owning it, and you don't want it to be a stock that's on a downward trend. So with Microsoft, you guys can see in the past 5 years, it has a really nice graph, just been consistently going up except for obviously this pandemic. And we did have a crash back in 2018, which was a small blip. And you guys can see that Microsoft did really well in this small downturn. And it's been very consistent. So about 344% up in the past 5 years, which is great growth. And that's what you want to look for when selling cash secured puts. You want the stock overall to be always going up. You also want to be looking at the financials for the company, checking out their balance sheet, the revenue and net income that they've been generating, and the debt that the company holds is also another thing to look at. Other things to look at when picking a stock is obviously the share price. You want to be able to have enough cash to sell a cash secured put on a particular stock. For example, Microsoft, if we go into the options chain, you guys can see with Microsoft, the amount needed to sell cash secured put, say at the $200 strike price, you need $20,000, which I know a lot of people may not have. So that's another thing to keep in mind. Just make sure to pick stocks that you're comfortable owning, has a very high chance or likelihood of the stock increasing in value. So as you can see, Nikola right now is around $31.17. But let's say in the run up here, we weren't that experienced and we wanted to sell cash secure put on Nikola. And let's just say June 9th, we sold a cash secure put at $75. Well, you guys can see here, it clearly passed $75, plummeted down to $62, had some sideways action, hit 74 almost. You might have been able to get out here, but it's just way too risky. Imagine holding the shares at $75 and trying to get out of it. You wouldn't get that much premiums selling covered calls. And let's just say, you continued holding on to the shares and Nikola continued tanking here. I mean, you would be stuck with those shares. You'd continue bag holding it at such a high price compared to where it's at now. And that's the situation you definitely don't want to be into. Not only is your collateral tied up, but you're so far down negative that the only option for you is either to wait, and for Nikola's case, a very long time, since Nikola is not showing any profits. They're a fairly new company. They don't even have any of their products out in the market. Or to cut your losses and sell out at a huge loss. And selling covered calls in the meantime, if you're holding it, wouldn't bring you anything unless you sold pretty close to the money covered calls. And you would risk, if Nikola had a run up, you would risk pretty much getting your shares called away anyways, and the premium wouldn't mean much, especially say you had shares at a $75 or even a $60 cost basis, because Nikola's at $30 right now. And say you wanted to sell pretty far out of the money, and you guys can see even at $38 you would earn a dollar of premium, which is nothing. I mean, peanuts compared to what your cost basis is to try to break even. And if we go, for instance, into this option here, the bid on it right now is 0, so there is volume and open interest, but for your covered call to get filled is highly unlikely at this strike price. You would have to sell covered calls closer to the money and just try to hope that the share price doesn't reach that, and so that your shares don't get called away at a huge loss if you're, say, at a $60 or even $70 cost basis. and hope that you would earn this $23 in premium. And if it does shoot up, then you would have to continue rolling it. And this is just a whole situation that you don't want to be in. And the only reason why you might be okay holding on to shares is if you were in a stock that you were very comfortable, even if the price of the stock continue tanking. We can look at, say, Apple. Apple is a huge company. They've been around for plenty of years. They have a very reliable product line. Their iPhone consistently generates billions of dollars for this company. Say before the huge crash that we had in March, you had shares at, say, even the peak at $324. Personally, this is not financial advice. If I was in that situation, I would be okay holding on to shares of Apple, even in a decline, just because I believe in the company. I know in the long term that they're going to end up ahead and their share price will get back to what it was originally. In these times, such as the crash we had, I would sell covered calls and try to earn some premium even in the downward market. And while we were heading up, I would do the same. If my strike price would get tested at a lower price than my cost basis, I would just continue rolling my option out further and further and collect premium. So that's all I had for you guys today. I just wanted to give you guys some advice on selling cash secured puts and which stocks to trade and which stocks to stay away from. I plan to create a video that goes more in depth, so stay tuned for that, and I'll see you in the next video.